Hello traders, this is Cousin Vinny coming to you from theclosingprint.com on November the 5th, 2017. In this edition of your weekend video newsletter, we'll discuss the indices and where they might be headed. We note IWM was lower last week. That could be a sign of risk off. As we enter the 9th week of trading without a respite or a pause in the markets. S&P 500 is up 15.59% and NASDAQ is up 29.44% year to date. Market cycle is still up. Wilshire 5000 shows shaking money flow continues to drop but turned back up on Thursday and Friday. That's a good sign if you're bullish. Junk bonds hovering near 52-week highs, up 6.34% year to date, with the bond stock ratio still trending bullish, but did tip a little bit higher on Friday. It's at 9.14. US dollar continues its bullish breakout and continuation of that inverted head and shoulders pattern we identified several weeks ago. If you're still along, as we are, congratulations. And Bukowski showing 4-5 green with a CPI signal green since 8/24, currently at 53.3, which is neutral, with 7 bearish patterns, 8 bullish patterns, and 246 patterns waiting for breakout. Here is the S&P 500 yearly chart. This goes back to the First and Second World Wars. The thing to point out here is just the observation that back in the 30s and 40s, after World War II, we broke out of this consolidation pattern, and we proceeded to move higher for 10 years before consolidating once again. The Vietnam War was towards the beginning of this particular consolidation pattern. We consolidated once again. Then we moved higher for 15 years from the breakout to the bottom of this pattern, and an additional 3 years before we started to consolidate again. And now we are 5 years into this current breakout. So with the process of deduction that we had this many years of consolidation in each case, once price action broke out, there was the potential, at a minimum, to move higher for 10 years. Now, this is not saying that we're going to see price action move straight up, but this is a consideration if you're thinking about longer term investments. Now back here in 87, we had quite the move. We hit 337.88 and moved back down towards the lows in December of 1987. That's when I started trading. And it took us 3 years before we got back to that level. So I'm not saying that we can't have a pullback, but I am saying there's potential for moving higher. Look at RSI and also consider the momentum in this particular move. If by the end of the year we peak above this level, this green bar that we saw in the previous year, 2016, that would show you a trough and a potential for this move to continue in the years ahead. Okay, so let's look at the weekly chart. We have seen 8 weeks higher in the spiders. We are starting week 9. The potential increases for the pullback, as we've been discussing over the last 3 weeks, as we started week 6, 7, and 8. Now we're presented with week 9. We haven't seen that. I can't remember the last time before a pullback or a respite of at least 1 or 2%. My opinion matters very little. What price action is doing, where the blocks are occurring, where do they reside presently? In this case, they're below us. Most of the blocks that traded last week are below price action. The 9 and 20 continues to climb. While these dashed lines are off slightly, you can see most of these bars are green. We're moving into an area of no overhead supply. I've been saying that for weeks now. In addition to that, tick cumulative continues to rise. So you know the only reason that this can do this is if they're buying more stocks on the uptick than they're selling on the downtick. So forget your opinion at the door. The data suggests that we could move higher, even though we're starting week 9. Here is a chart of junk bonds presenting a different scenario than we saw back here in March and in late July. This rollover preceded the market moving lower as well. This time, however, the 50-period moving average continues to move higher as price action moves sideways. This is more bullish than bearish, the fact that this hasn't rolled over yet. There is potential for it to dip down to the 50 and move higher. There's also the potential that we could lose the 50-period moving average. If the latter should happen, that would be your sign that the markets could roll over at least 1 or 2%. So keep an eye on junk bonds this week. After 8 weeks straight up, we transitioned from late September through October over the subsequent 8 weeks. We do have strength in oil and gas, as we pointed out, as well as technology. Other sectors are looking more bearish than bullish at the present time. The international market heat map has still stayed basically in the yellows, oranges, and reds with some green in the Southeast Asia markets. Japan leading, of course, as we mentioned, with the yen moving lower. We do also have Argentina, Canada, Germany, Spain, and Greece also moving higher. So keep an eye on those if you're trading international markets. Okay, so let's look at the IBD 50. A number of these stocks have earnings this week. We'll point those out to you. Adobe trading post earnings, looking pretty good. Subscription-based model. More than likely this stock is going to continue higher. I would love it if it pulled back a little bit first, as we've seen indication that buyers step in at the lows of the day over the past week. Each one of these candles has a wick at the lows, so keep an eye out for that on Monday, Tuesday. Potential we can get a nice setup on this one. Walmart is another one. This reports on 11/14, I believe, or is it 11/16? Just check that. This is probably going to continue higher. Bollinger Bands are narrowing, so there is a potential also that this could stay in this zone. We took profits on Friday. We did have a nice move from 87, an entry level. We added on, Thursday, and we took the last position off that we added on Thursday on Friday for a nice little dollar profit. And the swing that we had on this one from the 86 level, we had a nice $3.50 move. So Walmart looks good going into earnings, and will probably move higher. That's going to do it for me. This is because of Vinny coming to you from theclosingprint.com on November the 5th with our thoughts for the week. In addition, we'll be sending out a watch list later this evening, as usual, around 6 or 7 o'clock, maybe a little bit later, as I want to get outside and enjoy the day with my kids and family. Also, we'll send out some charts and some thoughts prior to the opening bell on Monday. Have a great weekend, and we'll talk to you soon. Take care.